You've been interrogating all the analysts about market activity today. So let's start on the drivers of the JSE. 1/3% up. I don't know if it's somewhat subdued, but what are they saying pushed the markets today?
You're right there. As I spoke to Nadir Turkan, who's an investment analyst at 24 Investment this evening, and he says it was a bit of a dull day on the markets today, but we did see a lot of that green on the all-share coming through from your gold miners as well as your platinum miners. You've mentioned some of the miners that did really well. Platts up 5%, Anglo American about 1.3%, as well as BHP Bulletin. And it's really around those commodity prices that we are currently seeing. We also saw a little bit of cautious trade, and this is of course based on the global risk events that we're expecting this week. So we're seeing the European Union will be meeting on Wednesday, and high on top of that agenda will be that Brexit extension that Prime Minister Theresa May is trying to push through. We're also going to be seeing the ECB meeting this week as well as developments around those trade talks between China and the US. President Trump indicating that within the next 4 weeks we're going to see some kind of finalization in terms of a way forward between China and the US when it comes to trade.
So of late, retailers, we've been talking about this quite extensively. Not a great showing this year for retailers. Today, nothing has changed, but Pick n Pay bucking the trend. 4% up, and I would imagine it's got to do with that trading statement. I get the feeling they're winning market share back.
They are, and that's what Nadir spoke about as well in our conversation. So what Pick n Pay has been able to do really well is to implement a turnaround strategy. And what this turnaround strategy encompassed was a big component of it was cutting costs and really making sure that consumers weren't taking on the extra burden of higher inflation, the VAT, the fuel price increases. So what Pick n Pay has been focusing on is taking away market share from the likes of Shoprite. So their strategy is now in line with Shoprite, and they've really been able to gain that market share through that cost cutting. Unfortunately for Pick n Pay, the workers have been the ones to suffer in terms of those cost cuttings. But what also was indicated here is that the outlook for Pick n Pay may be an interest one to watch closely, just based on those fuel levies that we're going to be seeing, carbon tax that we're seeing as well. And I mean, just because of what SARS is going through in general, there's really no room to cut taxes anywhere. So it's going to be very interesting to see what Pick n Pay does in terms of those operational methods it implements and really sustains them, taking away that market share from your likes of Shoprite. And they're even doing better than Woolworths when it comes to the food business. So really very good outlook for Pick n Pay in this particular time.
And then, Rafiwa, the Rand, I mean, about a week ago we had this Moody's opinion coming out. It was a big boost for the Rand. We saw it strengthen against the US dollar. And then emerging market currencies, we've seen a bit of pressure on the lira. Generally, when that happens, the Rand follows suit, it weakens. Didn't really happen, or am I guessing wrong here?
No, it really didn't happen. So just a little bit of context on the lira. So it's weakened quite significantly, as you've mentioned, and it's really put pressure on the central bank to put through stimuli to make sure that they can contain the downfall spiral of the lira. How this has benefited the Rand is that global investors, as Nadir indicated, is that when we're seeing emerging market currencies as risky as the lira, they kind of move away from those, and other emerging market currencies will seem more attractive. So that investment that we would have seen go into the likes of your Turkish lira move in towards the Rand, the likes of the Rand, which has kind of kept it steady despite those global risk events that you've mentioned. So that's what we're seeing there when it comes through, when we talk about the Rand in terms of just investors really moving to emerging markets that are less risky, and also global events like the US being a lot more dovish kind of help the Rand as well to remain at the levels that we're seeing currently.
Indeed. So just finally on the oil price here, $71 a barrel today. It's not something anyone filling up their tanks would like because, of course, the weaker Rand, and, well, thank God the Rand isn't weakening that much, but certainly the oil price now passing that $70 barrel. What the analysts are saying about where the direction of this oil price is going?
So the oil price, you're right, rallied about 20% since the beginning of this year. Really good since we've seen mid-November. So what they're saying is that it's not about the demand. It's really about the cutting of the supply that we've seen between the OPEC nations. But this may change in May as they review the supply cut discussions that they've had, as well as non-OPEC members coming into the scene. So while we are seeing this really good rally, $70, $71 a barrel, it may backtrack. So we may see see it pay those gains back into the between $60 and $65 a barrel, just based on the new supplies coming in. Another positive contributor to the rally today was that conflict we're seeing in Libya, really threatening the supply output there in that country as well. So really limiting supply, as well as those global risk events that we've just spoken about. China growth slowing by about 6% according to some data, but demand remaining strong. So the oil price is really just watching those risk events and really just keeping abreast of those supply cuts that have been initiated by OPEC.
All right, we'll leave it there. Rofeo Madzena, thanks very much indeed from our economics desk, giving us some take on what happened on the markets today.